Since Tesla's last earnings, the share price has more than doubled. So with earnings out later this month, just what can we expect this time around? Hello, I'm David Jones, and this is our channel dedicated to technical analysis of US stocks. I thought we'd do an update on Tesla. We last looked at them just ahead of their last earnings in October 2019. After the earnings, the share price has more than doubled. I can't promise the same golden touch this time around, but I thought, considering we've got earnings at the end of this month, it was well worth an update. So what we'll do in this video, we'll have a quick catch up with what happened to Tesla last time round, and since then I'll come back, talk about the reasons why, look at the expectations for this earnings, what could go wrong, then we'll go back and look at the chart in a bit more detail. As usual, if you're watching and you haven't subscribed, if you can click on subscribe, support the channel, and we'll continue to push out a couple of videos every week on popular US stocks. First of all, let's catch up with the explosive move in Tesla since those October earnings. So let's take a look at Tesla, just a quick one. Then we'll come back and look at it in more detail. We last looked at it just ahead of the last earnings, third week of October, when the shares were about $250 a share. They've broken out this correction. They were trying to stage some sort of recovery. Since then, of course, what's happened since then? The share price has gone ballistic. So the share price has more than doubled since those October earnings. We are trading, even at the time of recording, trading pretty much at all-time highs. I think the all-time high was set earlier in January, up around about 547, 548 a share, that sort of level. I'll talk a bit more about why we have seen a rocket under the Tesla share price over the next 3 months, of the last 3 months. What to look out for in the next earnings later this month, then we'll come back and look at things in a lot more detail. So the next earnings are due out on the 29th of January, and the market expectation is for around about 57 cents a share in profit for Tesla. And of course, it's all about those expectations. It's all about how close or how wide apart, either on the upside or the downside, the actual earnings are compared to what the market is expecting. So I mentioned the share price has more than doubled since the last earnings. Back then, the shares were around about $250, $254 a share. So back then in October, broad expectations was for Tesla to have carried on losing money in the previous quarter. The share price had a pretty dire 2019 up until then, but they surprised. The company came out and said they'd earned about $1.91 in the previous quarter. So clearly we saw a positive reaction from the market, and that's carried on since then. We saw the launch of the Cybertruck last year by Tesla. It was maybe a bit of a disastrous launch, with the unbreakable glass ending up breaking. But despite that, the company saw something like 250,000 pre-orders for that Cybertruck following that initial debut. And already in 2020, Tesla has announced that deliveries in 2019 were up 50% on the previous year. So all the news in the last few months seems to have been positive. But have the shares gone too far? Let's have a quick look at the big levels to look at, then we'll jump back and look at things in a lot more detail. Because we got all-time highs, there isn't too much to pick out on the upside. We have the all-time high, at the time of recording at least, $547 a share. So I think it's fair to say $550 is a psychological level, and after that, $600. So we're really, I think, when it comes to psychological levels, just really sort of picking numbers out of the air. It's if we see this share sell off in response to earnings. I think this will be the interesting scenario. If we do see some weakness, we've got support from earlier in January, just ahead of $490 a share. Because the share price has accelerated so much, we've got to go back, I think, really to December for the last major level of support, and it comes in just ahead of $400 a share. $400 a share, even though it seems a long way away at the moment, given the volatility we've seen, who knows what could happen over these earnings. It's a really big level. So let's jump back onto it and have a look at the really big levels to watch and how we could play this trend. So let's just look back in history and do the I wish I'd bought Tesla there analysis. So 2017, the shares traded up to about, what, 380, 385. Same again later in 2017. Same sort of area again, August 2018. So $390 to $400 was a real ceiling for the Tesla share price, and they sold off. They had a really poor performance the first 6 months or so of 2019. We started recovering, broke out this trend line. Then, of course, the earnings came out October last year, and the share price really hasn't looked back since then. So I think if we're looking at the technicals, it's clearly this bit here since October that we've got to focus on. So I think if we look at the new trends, it looks something like this since October. I think it's always difficult to buy a share when it has this sort of performance. But let's just focus in on this and look at the levels. If we do see it start to correct, where will we see the buyers come back in? So for me, it's all about price action when it comes to Tesla. We've got an RSI down here, 10-day RSI. Not surprising given the acceleration in the Tesla share price. That RSI has gone pretty extreme, pretty quickly. The last move into overbought was the 16th of December when the shares were $375. They're $170 higher than that now. I think it's a great example why RSIs, we've seen quite a few markets like this year, why RSIs will try and get you to go against the trend far too early. So looking at the price, this is our trend at the moment, going back, what is it? It's about a 3-month trend now in the Tesla share price. I suppose the aggressive trades, if you thought they were going to disappoint on earnings, the share price has got ahead of itself, is to sell short. But at the moment, I wouldn't necessarily, well, I wouldn't at all, want to be going short up here when we have it again today, while we're recording this, looking like it's pushing and threatening those old all-time highs. On the downside, we've got various pockets of support. 16th of January lows, 492, a bit of support at 475, much stronger support back at 400, and that does tie up with the 400, this trend line that's been running since those October earnings. So I think that's perhaps the opportunity here. I think there are two approaches here. You either buy into strength, buying off what the price action is telling us. So if we break out through, at the time of recording, break out through 547, 550, the all-time highs, we're a buyer, assuming the next phase of momentum is coming in, or we wait to see if we get a sell-off on these earnings. And maybe that's the better opportunity. I think if we do maybe sell off, and it sell off back to the mid 450s, that sort of area, we're still above this trend line at 400, lots of support there. And I think it's only if we start to lose this 400 level does it look as if this trend is well and truly over. But at the moment, you can't argue really with a trend like this. It's been incredible for the share price. It's more than doubled since those earnings back in October. Don't expect the same thing again from the current earnings, famous last words. But if we do see maybe a cooling off of investor sentiment from back here, I think any weakness back to this sort of 400, 450 area looks to be a great opportunity to buy into this trend. Plus, of course, that RSI will have unwound as well. So it'd be really interesting to see how Tesla reacts over these earnings, but that trend still definitely up. We'll see what those earnings deliver at the end of the month. As usual, we'll come back and do a quick update when the earnings have come out. But for this look ahead at Tesla, ahead of those results, we'll leave things there. So from me, David Jones, good luck with your trading and investing.